Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and trading view with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video till the end, and I will see you on the charts. In today's video, I want to speak about GBPUSD because at the moment we do have quite interesting price action and structure. Starting here on the monthly, we can see in fact how the market is currently testing very strong monthly demand and support. From here, all this move to the upside was created. Again here, the market tested and rejected the area. Again here, tested and rejected, and since at the moment we are testing this support and demand, we could expect a potential rejection higher. Now, if we drop down on the weekly time frame, what we can see is that from a weekly perspective, the market has just printed this double bottom, and as we are creating this double bottom, we could expect more bullish price action to develop and for the market to potentially break above the resistance that it is currently testing, because we must keep in mind that this area is currently acting as resistance because it is previous weekly support here, again here, which the market broke to the downside. And as you know, in the market, previous support, once it is broken to the downside, is supposed to act as resistance. And in fact, we can see how the market is currently finding some resistance around this area, but given the fact that on the monthly we have very strong demand and support, we could actually expect a rejection to the upside and a break once again above this resistance. But first, in order to have a break, we will need to see a weekly close above the zone. Now, if we drop down on the daily time frame, what do we see? Now, from a daily perspective, we can notice how we had the creation of this W formation. After W, we wanted to see the completion and then the continuation higher. That is exactly what the market provided. And at the moment, we have a new impulse and correction. And in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market at the moment is rejecting exactly the zone, which is in between the 50% and 0.618 Fibonacci retracements taken on this impulse, which create a very strong confluence area, which we did in fact expect the market to test and start to reject to the upside. I also made a full breakdown of GBPUSD a few days ago when the market was here, explaining all the reasons for which we wanted to see a correction to this area and then the start of a rejection higher, which is in fact exactly what the market has created so far. And by the way, I will link in the description this previous analysis so you can go and check it out for more free education. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the pound, we can see how with the last reports, we went from minus 80 to now minus 53k net positions with 2.6k longs added with the last report and almost 600 shorts getting closed. Now, this creates a long-term bullish outlook from an institutional perspective on the pound, which is quite good because from a technical perspective, we have already seen that there is a good probability for a potential break of that weekly resistance to the upside. So how we could be approaching this potential move higher? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market, as we have right now, to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries, at that point, we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I speak about valid entries and things like that, that is all part of the mentorship program, which you can find at transparentfxtrading.com. You will find here my entire course, including everything that I know about the markets, plus all my strategies. You also have the possibility to access one-on-one coaching, VIP market breakdowns with Telegram signals, the CO2 data software that you have just seen me use, and also the trading station software, which puts together everything that you need as a trader all in one place. Now, if you scroll down past the testimonials, you will see that at the moment I'm running a promotion in which you have the possibility to access the mentorship program for $297. And since I have partnered with the forex broker Blueberry Markets, if you open an account with them, they will refund the mentorship program price directly in your trading account. So if you scroll down, you will see that here you have the possibility to join and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I'll see you in my next video.